Good day. This is the Eye of the Storm podcast with the weekly update for the NASDAQ 100 being recorded on Sunday, June the 9th. I am going to begin with the cash market, the NDX, and I'm going to start here on the weekly chart. We continue to work through on the preferred count a primary fifth wave up. And within the primary fifth wave, we're going to be consisting of 5 waves of intermediate degree, of which intermediate 1 and 2 are complete. We are still within intermediate wave 3. Now, within intermediate wave 3, there are going to be 5 waves of minor degree. And we're only finished minor 1 and 2, and we are still within minor wave 3. Now, within minor 3, we're pretty close to finishing minute wave 5, which will then put in the high for minor wave 3. So, and then we get a minor fourth wave correction, and then a minor fifth wave up, and then we get an intermediate third wave high, and then an intermediate third wave correction, followed by an intermediate fifth wave up. So we still have, as one would say, enough upside left to do. Now, in between all of that, we have 2 larger corrections that are likely to occur before that ultimate high is put in. And that might come September, maybe even towards the end of the year. So we'll wait and see. Now, the alternate count still suggests that we're getting close to finishing a primary B wave, and that's that green line right here. And that's at 19,180. Now we're getting up there and we're getting close to that level. So how would it count out then? If this is primary A and this is primary B, what's going to be inside that primary B wave is 3 waves of intermediate degree labeled A, B, and this is wave C. What's going to be inside that intermediate wave C? 5 waves of 5 waves of minor degree. And then we could, this is going to be difficult to count because we could also say that this is 1, 2, 3, 4, and we're inside that fifth, which could take us up to there. We're giving the benefit of the doubt within the alternate count, which again suggests that we don't get much above 19,180. Even if I leave it as such, then I still believe that we still could finish here or a little bit above there, and then that B wave may be done. Now, that remains the alternate because there's been so much power within the market based on some other factors, artificial intelligence, a stock split that's now taken place in NVIDIA, just this renewed interest. But a lot of that got squashed on Friday if we were looking at the fact that, last week, the Central Bank of Canada and the Central Bank of the European Union both cut rates. Now, so that reverted everything back to what the Fed's going to do next week. And so the thought process is, oh, they have to cut now. They're definitely going to cut now, or at least start to indicating that when we're going to see this. And so that boosted the bond market substantially. And it also let stocks kind of go up. Then we got the employment numbers. And so last week we had nothing but just all the different companies or indexes that follow and show us data for employment. And while a lot of it was like, okay, employment's still pretty good, but the major thing that came out was Friday on the US non-farm payrolls and the unemployment rate and what's really going on. So the economy in and of itself, or the job market in and of itself, remains pretty robust. A lot of people are finding and still going to work. Whether they're switching jobs or whatever, it's very healthy. The market is absorbing and people are getting these additional jobs. That in and of itself is inflationary. Healthy for the economy, but unhealthy for trying to tackle inflation. So what does that suggest? That the Fed may have a lot of problems starting to cut rates as soon as next Wednesday. That's when the Fed June meeting. Beyond that, we have to wait to see what could happen. So a lot's going to rest on what Chairman Powell is going to actually say in his press conference. I do not believe that the Fed will hike rates on Wednesday. So it's going to depend on what Powell, is he going to come out more hawkish or is it going to come out more dovish? So that's going to be the big choice that we got going on. My gut tells me that he's going to try to remain on the positive side, a little bit more like the dovish side, because he doesn't want to upset the market. So I think he's going to continue to go, we're winning this battle against inflation, slow but sure. So we're going to leave rates unchanged. And again, if such and such, this, and that happens, we might look at it. But again, I imagine that next week and the week after the Fed meeting, we'll get a slew of all the Fed personalities. I put quotes around that. So all the Fed governors and presidents, they're out there on the stump trying to just keep everybody calm. Excuse me. In terms of what comes next. So that's what we're looking into next week. Also, now that NVIDIA did the stock split, I really do believe what happens next will be that the volatility will come out of the market. And what I mean by that is, like, volatility is also measured in how fast, market kind of moves from one level to the next. And leading up to this, NVIDIA's had these wild swings of up 30, down 30, up 40, down, just every single day almost. Now, stock is reduced. It's going to start on tomorrow, on Monday, at 120, 121. So instead of making a $30 or $40 move, maybe you can make a $3 move, maybe even less. So even if a $15 move previous turns into a $1.50 move, how much is that going to affect the NASDAQ in and of itself? Not as heavily, even though it's now pushing up to, it's outdone in terms of capital. It's outdone Apple. It's the second company. Number one is Microsoft, number two is NVIDIA, number three is Apple. So they're waiting changes in the NASDAQ, of course, and also in the S&P. So what gets up? Microsoft first, then NVIDIA, then Apple. So if we get all three rallying, then yeah, we'll have a good day in the index where the market should continue to move higher, but not at the same speed. That's my point. So let's kind of dive in to see what we got going on. Also, let me just start by saying we have next week nothing on Monday, basically nothing on Tuesday, the NFIB Optimism Index. Okay. It's Wednesday where we start. And what do we have on Wednesday? Consumer Price Index. And we've got that coming out at 8:30 a.m. Then the Fed decision at 2 p.m. Eastern. Excuse me. Wow. I know. And I'm sorry to say, but I tested positive for COVID. And so I'm kind of battling that. I'm taking the Paxlovid, but boy, I'm starting to battle, and that's why I'm coughing a little bit more, and I apologize for that. So here we have Thursday, initial jobless claims and PPI. So we got 2 days in there that both of those PPI, CPI, we're talking about inflation. What are those inflationary numbers going to show us? An increase, a decrease, the same? How's that going to reflect against the market? So, or what happens if it comes out way above expectations or way below expectations? So that's what's going to be happening leading up to. How should the market react? Let's go talk and look at the Elliott and what kind of the market is setting itself up for. So what we have going on our weekly is that, again, using the preferred count, where we had primary wave 4 in October of 2022. So we're still within this upside move for primary wave 5. We haven't completed minor wave 3 yet, which would be minor 3 of intermediate 3. So this is the 3 of 3 move, and it's still in progress. Finishing, in my mind, but still in progress. So let's start bringing this down. I want to look at the 4-hour chart. So we're going to look here, because that's going to take us right into minor 3, where we have minute wave 1, 2, 3, and 4. We've already lined up our fibs for minute wave 5. And what are those indications? That minute wave 5 would be 0.618 of wave 1, and that's at 19,592. If it goes full bore, we're above 20,000. Now, I'm not necessarily expecting that, and here's why. Within this move, what I've also often talked about is that when the fibs get kind of extended in terms of how high the market could go, what becomes and takes precedence is going to be the actual structure. So here we are in that 5th wave. That's our fib levels, because wave 1 was very powerful. But what do we look at? We're looking at the structure. So we have 1, 2, 3, 4, and now we're within minute wave 5. And let's break that down. Let's take a look at the 1-hour chart so we can see. I got to back that out. I need a little bit more data. I need more than that. Okay, let me go back out to that 4-hour chart and take a look. Here we are. Excuse me. So within minute wave 5, we have minuet wave 1, 2, 3, and 4. So we're in minuet wave 5 of minute wave 5 of minor wave 3. So what can minute wave 5 do? Well, here are our fibs. 100% has been wiped out. That was at 18,008. I believe it was 69, 49, 69. So let's call it 18,870 is where minuet wave 5 was equal to minuet wave 1. So that's kind of come out. So I'm going to remove that right now because it's been taken out. That's the 100 level. So I'm going to go like that, take that, that's out. So what are we looking at right now? Well, here we have that 1.382. That's for the alternate count, but I'm leaving it in there. I believe it should still form some resistance for us at 19,180. Now, if that works and completes this 5th wave, and then in turn, the minute 5th wave, minuet 5th, the minute 5th, and the intermediate 3rd. Well, then we start to come down in minor wave 4. And your first line of defense is right here. So we're still confronting the possibility, or it's actually a very strong possibility, no matter where this ends up, we're looking for a 4th wave correction. And that suggests that wave 4 will come, a minor wave 4 will come back down and find its support, if not its endpoint, within the price territory of the 4th wave of 1 lesser degree, which is going to be right here. So we're looking at a pullback back to 18,004, well, let's call it 450 to 17,000. All right, 17,040. That's a pretty big range, but it's going to be a pretty strong drop. And I believe it can happen very quickly. And then we whip and turn and go up again in a minor 5th wave to finish intermediate 3, come back again. So wherever this 4th wave ends, it's going to be a support level for a little while, because we should stop, hold, go back up in a minor 5th wave to finish intermediate wave 3, which will find its support for intermediate wave 4 back in the fourth wave of one lesser degree, which is going to end up being the minor degree, which is going to hopefully find its support here. Once we have the highs in, we'll be able to put fibs in, which will give us a stronger indication. Is it going to be an extended drop, and are we dropping further on a fib basis? Right now, this would be the area that I'd look for. Now, upside, right? We have it now. We have 19,180 to 19,290. So we're almost up to 19,300. And it's getting a little sketchy on like, are we going to reach that level before Wednesday? Or will we reach it after? So here we sit and we wait. We could reach it actually before with CPI on Wednesday. We don't really have anything of any significance until then. So we could wallow around, bringing this down to a 1 hour chart. This could be the start, right? So what can I say here? On the NDX, 1, 2, 3, 4, 5. So was 19,111 or 19,114, I'm going to call it. Was that the completion point for Minuet Wave 5? I don't know yet. This is the cash market. I think that the futures market might present us a little bit different picture. Now, if that's the case, then we're already starting our correction, right? Again, if this is Minuet Wave 5, it's completing minute Wave 5. It's completing minor Wave 3. So bear all of that in mind. If we are starting a minor fourth wave, and this is the starting point, then we're looking for a much stronger drop down into here. And it can happen very much like this. Now, this was the end of May, right? So we've got a bunch of stuff that we can compare this to. We also have, not necessarily next week, but we have on June the 21st, the monthly expiration, which is a lot of different things. We got futures expiring, we've got all the options expiring, we've got a lot of things going on. Plus, we've now watched how it's built to how much notional value is going to be coming off on Friday. So we need to just keep our eyes and our structures really in mind, because the market may be beginning that correction already. So basis the cash market, that could have been completed all the way up to minor wave 3. And so I'm looking to see how this develops. I've left it all open for right now because there's a possibility we have 1, 2, and then 1, 2, 3, 4, 5 of 3, 4, 5. Okay, see that? 1, 2. Third wave. 1, 2, 3, 4, 5 of 3. And then we come off in a 4. And if that's the case, we might still have some downside. Let's just kind of take a look. We're looking 1, 2, and then we're going to go in here 1, 2. Yep. I'm going to run it from here. And let's just go look at what it could be. Now, see, what happens is because we're covering so much territory. So we've already come down basically almost to that 0.236, which is minimum at 18,943. If that holds and we go back up, then we got a shot at least getting back above 19,113, 114, maybe a little bit higher. Now, I feel that the market may have a little bit of trouble getting itself up too high in advance of CPI and the Fed. So we could wallow around down here until Wednesday. But where can we find support that would still keep in line? We have one last run up before that minor 3 is complete. we can drop all the way down to 18,838. Not bad, that's over, 100 points from where we finished up. And we can do that. We can get it down there and still then rally. But if it should occur, then we've got some additional fibs that we can add up into this mix to see how high we can get. So that's the cash market. And we can see that basically moving averages, they're kind of going flat. The 13 recognizing the downside, the 20 getting flat, the 50, starting to roll a little bit into a flat, and the 200 not too impressed. So everything's still lined up for the market to continue to go up. What would start to significantly change that would be that the 13 breaks the 20 and the 20 starts to head lower and both break that 50. That would kind of turn it a little bit more to that completed minor wave 3, and we're in that minor 4th wave. So let's go over, that's all basis to cash market now. Let's see what we can match up with the futures market. Again, let's just take that peak out and let's take a look here. Same deal. Now here, yep, you can see I did switch it. So in fact, I'm just going to remove those. I left them there because I wasn't sure. Now I am. That I've got, this is the preferred count, that I have primary wave 5 in progress, intermediate 1, 2, minor 1, 2, minute 1, 2, 3, 4. We're in minute wave 5. That would be on, that's the weekly chart. Let's start to break it down and take a look inside all of this. There's minute wave 4. Here we have 1, 2, 3, 4. So we've got it all lined up for this minuet wave 5 to be jumping into action. Now, let's go down to the hourly chart, and here we are inside. Okay, so this is the future. So we have minuet wave 4, and then it gets ugly. I have to say, it gets ugly, but it is countable. So this is minuet, this is sub-minuet, this is sub-sub-minuet, and believe it or not, I'm feeling that sub-sub-minuet and sub-minuet wave 3 completed, I'm not sure what level here or level here we want to consider, because I think 3 and 4. So I think that quick slide did complete wave 4, and then we started to rally again, and then we dropped off again. So here's the ticket. If I'm looking at the cash market and it's kind of giving me a little indication that there's a strong possibility that here, as well as there, that the minuet 5th wave, so this degree, completed there, right? If that's the case, wow, well, then I'm putting this over and we have starting down. I'm leaving the benefit of the doubt that we're still inside this sub-minuet wave 5. Now that's suggesting that we go up to start our week. If we languish here, it's going to stay in place. If we start to break below these levels, we have the 4th wave still in progress, and we could drop all the way down to there, switch it about, and still look for that, and I move these over. That's the difficulty that we're having right now. Let's see how this all starts. Again, like I just talked about just previously in the intro here, that now that NVIDIA has split, a lot of the volatility is going to come out of the market. So, it's not going to move quite as fast. And that might clean up a lot of these like shifting and moving and crazy moves that we get when 1 or 2 stocks decide to really give it up or rally, right? So that's pretty much the NASDAQ. Here again, we're still in pretty much, but you see the future started to come down, and looks like it did break, got it back, closed right above the 50 right there. Now we have the the 13 starting to break below the 20, but they're kind of equal right there. If that really starts, if we open down and they both come down and break that 50, then I'm going to say that we are definitely going to head probably likely to 18,875, which is our next support for this subminuet wave 4. So again, 4, and then see, this is where it gets really bizarre, right? If that's the 4, maybe not. Maybe it's A, B, C, and this 4 goes here. 1, 2, 3, 4, 5 for 5. Hard balancing act here because of what we have yet to kind of see and what the potential for the market to make a stronger move right now in advance of what's coming out on Wednesday. So let's leave it all to chance here. Let's leave it all to what the possibilities are. So what the market can continue to move lower. This would then shift. The 5 and the 3 can shift to right there because that is a slight new high. And I'll tell you how else it fits. If I just go over here and put it on a line chart, it does fit right there. This fits right here, but this could be this 4. And then this doesn't count. And then we got one more rally to do. Or this 4 still has one more downside to do. So if this is, A, B, C, and this 4 comes over here, and then the 5 comes here, then this 4 is not done yet. Right? So even if I kind of just move this and change it just a little bit as follows. Let me take that off. And let's run it a little differently. Let me just put it back on my other handle. There you go. So I'm going to put it here. And what we're doing is we're going to put that 4 there. And so, boom, 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 100%, 19,181. That's what we'll be looking for. So not even if I have to put it there, it has nothing. It's a new high, but doesn't really fit. And this doesn't really fit as 5. So I would have to put the 4 there. And this is 1, maybe 2. But then again, it would break if we broke below this level. So we're in a kind of a difficult spot to try to determine, well, what actually is happening here. At best, if I'm relying on the cash market, the minor 3 may be done. If I'm relying on this, the futures market, we still have some detail. We still have some smaller moves, which we'll find out what happened to what doesn't happen. So at best, the 5 goes here. And then again, it's going to be a sub minuet wave 5 to minuet wave 5 to minute wave 5 and minor wave 3. So we got a lot completing up here. Whether it happens between now and Wednesday, it's kind of shifting a little bit to go like, wow, if we're getting all the way up there and we've not completed that minor 3rd wave, well, then you kind of look like, well, we should be able to do that by any information that comes out by Wednesday. So this all hangs in the air for right now. In terms of the big picture, well, I think that we have to consider that minor wave 3 is done or very close to being done. And we start that minor 4th wave correction. And then we're looking for that little bit, that larger move to come down. And there's our zone. So we're really kind of just waiting to see from what level it's going to start its correction. And right now, I think we're still inside this mess right here, which a lot of it was done due to NVIDIA, due to a rally into expiration on Friday, and then turned into a decline. I mean, we basically had Apple up 2. What if Apple's like done? Everybody got out of their positions and now Apple can start its next phase. It's going to start to pull the whole market down. What if now we get adjustments in NVIDIA where they're willing to sell it here, right? Even though they have all these extra shares, they're willing to sell it here. How's that going to affect? What happens if Microsoft starts to continue to go down? So again, we need more information. We need a lot of things that took place on Friday to be factored back in to get that all smoothed out and to find out what the next leg is going to consist of. Have we finished minor wave 3, or are we still in a sub? Are we still in minuet wave 5 and within it sub minuet wave 5? Both carry equal weight. So the cash market being a little bit more indicating that minor wave 3 is done. The futures market, no, not indicating that. Possibility is there, but it's not clear. And that, unfortunately, is how I got to leave this right now. So what I will say in conclusion here from what the charts are telling me is that we have that potential to run up, finish this minor third, right? So to finish the sub minuet wave 5, the minuet 5th wave, and the minute 5th wave all sit in the balance via the futures market. So we should go up one more time. Excuse me. So, but we may have at that level. We may have done it at that level. Finished it, and we started to go down. In fact, if we go from there, this is Friday. Friday, we reached a high at 19,155 and then closed at 19,130. So the market dropped 125 points off the high. Was that rejection? Yeah, it kind of looks that way, doesn't it? So 4, 5, and put everything above it, and now we're starting down. If that's the case, there's our first target. If not, we're going out, and there's our target. So here we have target number 1, here we have target number 2, depending on what degree it's dropping in. All right, now, again, just to kind of emphasize, nothing really coming in on Monday and Tuesday. So we could flounder, just kind of sit in a range. Wednesday, CPI and Fed. Thursday, initial jobless claims and PPI. There are going to be reactions off of that. Plus, as I said, a lot's going to depend on what Powell talks about and how he slants his press conference. All right, that's it. And the next Elliott Wave daily update will be on Monday, June the 10th.